Good evening, folks. Good evening. So, just back with another trade breakdown for my buy today on pound yen. Um, Today was a little bit of a strange day in a sense that price looked good, upside looked good. However, there just wasn't enough, volume at the time. And I'll kind of discuss that in a moment as to sort of why I got involved in my trade, but I actually took a loss today. I shouldn't say actually, as in like I never take losses because I have taken losses. However, since I've started doing YouTube, I've maybe had like, you know, very little losses. Um, so I took a loss today. I took two trades during the week, which were for about 0.8% total, and then I took this trade today. And this trade today was a loss. It was basically like almost a full loss. So it turns out then that my week actually turned negative in that sense in terms of my overall weekly return, percentage gain, monetary value, that type of thing. Now, was it wise for me to take a trade today? It depends really how you look at it, because there was pros and cons. There wasn't really much volume at the time of London Open, and also, but at the same time, we weren't really breaking down, right? Um, and just kind of in the position that where we were, it looked good to see potential upside. I mean, for me personally, I thought upside was more likely, regardless of the bias and things like that, just because of where we were, which I will kind of break down. But yeah, I'm just looking at the 4 hour chart. This is just basically prior to me actually getting to the chart this morning, so we can see that we had the two bullish candles since the close, or sorry, two 4 hour candles since the close. One's bearish, one's bullish. The bias is mixed. So what makes more sense? Well, to me, it's basically kind of similar to Wednesday. Where we are, regardless of where we came from, just where we are. We pulled down here on Wednesday, rejecting this support, rejecting what's left. Where are we now? Well, we're actually above that. So again, we have these 4 hour candles, which are all failing to break down. We can't break down because overall we're bullish. So once this formed a support, it closed above the previous. I wasn't really too bothered about that. I was more looking at, well, we closed above the support, right? So we're sort of playing within this zone. And I was like, well, if we can hold above here or hold structure, then upside's most likely. So, if you bring this across, we can see that we've pulled in, rejected, closed inside, but failed to break down. We've then closed above. So I know from this wick here to here is a range on the lower time frames. So ultimately, kind of being above that is where I was looking to take options, and I was looking to come up to roughly around here, in and around here, target wise, because this is basically Wednesday's Asian high, Asian high resistance prior to the session. So I was looking to target that, and I was seeing how price was reacting on the open, and seeing if we could get a push, with the open or just after the open. Sometimes the volume comes at open, sometimes it maybe comes 15, half an hour into the hour, and we can still continue upside. So that was what I was thinking. I will bring on my zones as well, because I do have a daily resistance zone. Daily resistance zone I was saying there. Sorry, the dog was just barking. But yeah, a daily resistance zone somewhere in around here. And the fact that where we were leaving this. We were leaving this zone, kind of similar to what we've done in this candle. I was looking to see if we could get something like that here, in a sense. Now, the difference obviously to where we were today compared to where we were Wednesday is we had Tuesday's candle forming a support, so we were pushing up in the market, and yesterday was bearish, so we were actually pushing down in the market. So that's a difference. However, I'm looking at kind of where we are in terms of structure. We're buying in an area where we pushed up from recently, so that's sort of what I'm looking at. As well as that, we're pulling back to a previous level of structure. yes, price is pushing up and forming higher supports and higher resistances and targets, and then this candle's broken down and broke through this support and this support. However, this is just news, so I'm not taking this as a potential change in structure in a sense. Essentially, we could come up and could come down, and that would confirm that we've sort of rotated back to the downside. However, because this was news and we pulled down to a previous level of structure, it's still an area I took a buy from on Wednesday. So it's going to be an area I'm looking to replicate the sort of same idea today. Now, as well as that, what day is it? It's Friday. It's the end of the week. Essentially, I probably should have not even traded today. When I think about it, I took 2 trades during the week. I didn't have the best of weeks in terms of return. However, if I looked at that and says, well, look, if I get into a trade today and it loses, it's potentially throwing away what I'd done this week. Do I really want to do that at the end of the week? That was probably a bit naive of me to get involved today. I believe, reflecting back, I probably should have said, you know what, sit out, come back Monday, don't take a loss today, don't do anything stupid. But I'll kind of get through into the trade now. So when I drop down to the time frames, we're down at the 1 hour chart. And this is 5. Let me just skip through because I came to the charts at about 6:45. So this is 8 o'clock here, right? This is 7 to 8. So this is basically the range. I'm looking at this as let me see, give me 1 sec. Yeah, so I'm looking at this as the range here, and I want to be, this is the 4 hour high from yesterday up here. So I want to be above that. Okay. So what I like about this is we're pushing up in the market. We're respecting candle bodies. We're pushing bullish. We're breaking highs. We're continuing. Yes, we're in ascending nature and we're at the top of a range. So technically, when you're at the top of a range, you don't want to be buying. You want to be selling, and when you're at the bottom of the range, that's where you want to be buying. However, this trade was simply based on continuation. It was a continuation trade, with my stop loss below the current 4 hour low, which is basically in and around here. Basically in there was where my stop loss was, and that's kind of like where Asian high was. So I thought that was a nice area, or a big enough area to potentially manage a position if needed. But I thought there was enough room there. If we were going to get the breakout, then I believe my stop was in a good position there. So I will kind of break that down. But that was sort of the idea. It wasn't, you could say, well, you're at the top of structure, you shouldn't be buying, but it's a continuation trade. I know that there's no real target left in terms of, we haven't created a target first, and because the bias for the session is mixed, that might be a good idea to wait for a target to be formed first and then target the target. Essentially, it is Friday, the bias is mixed. That would have been a more sensible play, but the idea was based on continuation. So that was that. If I just drop to the 30-minute time frame, this is let me just remove that drawn. So this is like I was saying, this is a range, right? When this candle started to break, I just took a market order there. I put my stop loss down here, which is basically the most recent support in terms of the upside. We have then broken out and above the previous high, and I'm looking for a continuation. So price did push. I think it was about, from where my entry, about 12 pips, right? So it did push into profit, right? So there was an option there for me to manage. However, it wasn't my idea. It wasn't where I was targeting. So I wasn't going to, close the position out. However, it did move into a profitable position. So it did give me an option to secure something. Whether or not the idea to secure something was the right idea, be it on the basis it's Friday, we haven't really got the volume push. As we can see, this is 30 minutes. So we've already had 30 minutes since London Open, and the candle's only pushed 22 pips, you know, and then the second half of the hour has closed bearish. So again, it's not really um it's not really the volume isn't present. There isn't any push or continuation with that. So I was having to discuss with my mentor today about this, and as much as it made sense to potentially get out of the trade or potentially manage because there was no volume, it also made sense to remain in the trade. And the reason being is because we're not breaking down. If we're not breaking down, we're going to go up or we're going to range. But if we're breaking out of a range and we're continuing, there's every chance that price might just take its time to get to the upside. We might just, slowly make our way up. But usually with volume, you might just get the straight pushes. But again, volume isn't present. So I do know that sometimes volume recently has been coming in around 9 o'clock. Now, the next 30-minute candle or the open of 9 just opened and tanked down, right? So the volume kicked in at 9 and we pushed down, right? As we sort of approach my stop in and around here, I just cut the trade. I lost, right? Almost a full loss. So I kind of asked my mentor, like, what was the chances of this volume continuing to the upside rather than the downside? Because at the end of the day, the bias is mixed. We're pushing up in the market. There's every chance we can open with the new candle. And if this candle had been bullish and pushed this way, it would have hit my take profit. But it opened and we went down. And the sort of response I got in relation to that, which was quite interesting, was basically the direction the price was going leading into the open of that candle. And we were pushing down. So as we were pushing down and as we open, there's a higher probability that price will continue in the direction that price was leading into that candle, which is downside. If this candle closed bullish, there would have been a higher probability of the candle opening in that direction. So I think that's very interesting in terms of looking back at data and looking back at volume pushes and price points where you see big candles and looking at what happened before and what direction was price going leading into that. And again, that can also add and help with data collection, because if you're looking at impulse entries and pushes, you can actually capture data and see, well, when price is going in a direction and volume opens into that direction, there's a higher probability of it happening than maybe price opening or like closing bearish leading into a volume push. And because what I was potentially expecting with this London open was, recently we've been seeing a push down with the open and then price flips and goes bullish, kind of like exactly what happened on Wednesday. We opened, pulled down, grabbed liquidity, flipped and went bullish. So I was potentially not expecting, but trying to think and see, if we open and push down first and then we start to come back up, can I get involved in a trade? And what I was kind of like looking at was, well, the sort of similarities in what happened on Wednesday and what happened today, in terms of we're coming up in the market, we're above resistance, we pull back and then we continue. So we're moving up in the market, we're above resistance, I was seeing if this was going to pull back and then continue. So that was the idea. And I actually drew this on my chart this morning, which I'll kind of show. And the exact thing happened. It played out to a T, but it just came later. It came outside of my trading session. And I think it might have been just due to potentially the news it was today that was the catalyst for that upside. But if I just bring on my charts, this was my trade here. I just have a fib on here just to easily identify 0.25%, 0.5%, 0.75, and 1% full, because how I'm managing, I just want to visually easily see where I could potentially close and progress in terms of my current management style. So that was a trade. My stop loss was below the current 4 hour low at the time, which was the most recent support here from a push up, pull down. We pushed into a bit of profit. We closed bearish, and then price hit the stop loss. And if I just play out price, what happened? We ended up, that's where we are now. So that is the trade. It was a loss today. Losses are fine. Reflecting back on this, I think based on where I was for the week in my position, where we are in the week, and that we're at the end of the week, not really seeing the volume come in at London Open and price pushing up and closing down, there was an option for me to say, do you know what, maybe this isn't the day. And I think if this was any other day, in terms of earlier on in the week, it might have made more sense to give this a shot. However, mixed bias might be best, or is best, I would say, to wait for a target to be formed, wait for price to push out, pull back, form its target. And if we look at what's happened, price has broken out, formed its target, pulled back to a previous level of structure support, formed a support, failed to push down, closed above, changed in structure back to the upside, and then price continues and hits the target. So that would have made more sense. This entry would have came at 12 o'clock outside of my trading session. We can kind of see it's a nice hourly support, and it's as simple as that, really. I think my option was an option on the basis playing for continuation. It was just volume didn't really come with that, and there was enough time for me to recognize that and potentially exit the trade. However, the reason I didn't was because just as much as there is no volume at the time, price wasn't pushing down, it wasn't breaking down, so there's every chance that we could still continue on to in and around 162,400 and 162,500 to where my target was. And this was basically what I drew today. So if I just bring this down, this was a screenshot from my chart today and what I was looking at. This is my trade from Wednesday. This is a mid-range support and resistance, which is basically in and around here. And this is a support and resistance here. So I was looking to see if we pull down with the open, the volume pulls down, and then we push, and as we break, target to target. So the exact play happened, but it just happened a little bit later than I anticipated, which is outside of my session, which is absolutely fine. But yeah, the analysis, I believe, played out, but it just didn't play out how I expect. Not that I expected, but I wanted it because I was looking for the continuation play rather than the pullback to trade to the target. But yeah, that's a trade breakdown, so I'll get this uploaded. But appreciate you taking the time to watch and listen, and any questions, drop a comment, just subscribe as well. Try and get me to 100 subscribers just so I can change my my channel name and amend that. So cheers.